Everyone, thanks for joining us. This is Yield Talks on the Edge podcast. I'm DeFi Dad here with Nomadic. Every Friday, we host a live space to review new and interesting DeFi, to spotlight what we believe is an on-chain opportunity more of you should know about. Today, we're joined by the lvl co-founder, Kedian's son. lvl is a stablecoin lvlUSD powered by USDC and Tether in blue chip lending protocols such as Aave and Morpho. They are just over 185 million now in market cap. lvl's stablecoin yield for staked lvlUSD is currently 7.87% APY. That is notably higher than the likes of Athena's SUSDE or Aave's stablecoin rates for USDC and Tether, or Sky's SUSDS, which is at a fixed 4.5%. So it's pretty impressive. It's part of what prompted us to want to have this conversation. As stablecoin farmers, Nomadic and I have questions about how are they achieving a higher stablecoin yield? How can we earn with lvlUSD? What are the trade-offs to this design? And how can we get involved with the protocol? So anyways, Kedian, thank you for joining us. Why don't we kick off with just more about why did you start building lvl? What can you tell us more about the mission at lvl?
Yeah, first of all, thanks so much for having me, and excited to chat with you guys. And appreciate the introduction. That's a very good and accurate introduction of what we're doing, and kind of like some of our traction so far. So I guess before I get into like exactly how we started building lvl, I think part of what's relevant is kind of like how it's like, I guess, like our team's personal background and like how we got into crypto and stable coins in the first place. And so just a little bit about myself. My background's in various forms of finance. So I studied finance for my undergrad, and then I went on to work in investment banking. So, very traditional finance. And then I moved into like the fintech space, where, was sort of seeing more of like the innovative side of finance. And what I realized working at a fintech is that in some ways, fintechs are innovative in terms of UI, but not necessarily but it's not actually like a step up increase in terms of like improvements on like financial products themselves. And what I mean by this is like, I'm not sure how aware the listeners are of like how a lot of how a lot of fintechs operate, but most fintechs that we know of, they're actually essentially just built on top of, partner banks or traditional financial infrastructure. And so they sort of provide this improvement in the UI built on top of this infrastructure that I think, with us as people in crypto, we sort of know that this infrastructure is broken up to some extent, right? And so I think what really interested us about crypto and specifically stable coins is that crypto isn't just like a UI improvement on top of financial products. It's actually like it's like a structural improvement that not only makes it allows us to be more efficient and create better products. It also increases financial inclusion like globally. Because crypto is permissionless, it allows people from anywhere that has internet access to access these financial products that were previously only reserved for like very sophisticated users or users in like developed countries. So yeah, that's just a quick background on kind of like what really inspires us about being in crypto in the first place. And then obviously stable coins are like this very core part of crypto that has like a very specific kind of, real world use case as opposed to the more speculative side. And just to, be clear, I don't have any issues with speculation in crypto. Well, I have an issue with scams, but, like at the end of the day, speculation is part of like financial markets. But, what we are really interested in is kind of like the more like a real world use case side of it. And so I guess like the broader theme of like what we're building at lvl is I would describe it as like we're trying to build permissionless on-chain banking products that increases accessibility of financial products for people that, didn't have that access previously. And the products and the initial products that we're starting with is like lvlUSD and slvlUSD, which are like the stablecoin, which is a stablecoin, and like the yield bearing version of the stablecoin, respectively. And the mechanism that we've designed, if you think about it, it's actually very analogous to how a traditional bank operates, except, we've done this permissionlessly and built it on chain. And what I mean by that is, if you have a bank account, what you do is you deposit your US dollars or like your fiat currency with the bank. And the bank mostly uses those deposits to lend for loans. And specifically, it's mostly mortgages, which are over-collateralized loans. And so what we've built at Level is it has a lot of similarities there. So, like DeFi Dad explained, we take USDC and USDT as deposits from users, and then we lend that out onto very like low-risk lending protocols like Pendle and Morpho, which are over-collateralized like lending products. And then we ultimately pass that yield back to slvlUSD, which is like the yield accruing version of it. So that's kind of like just like the background of like, how we started building Level. It's really about like, how can we build banking products but permissionlessly on chain and offer this to like more people.
Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over 1 billion in AUM across USDC and BTC products. And now with SYRUP.FI by Maple, anyone can earn institutional-grade yield. For deposits of $1,000 or more, now through May 31st, SYRUP.FI holders have a shot at a $300,000 grand prize expected to be drawn in November. The more you deposit, the higher your chances to win. Learn more at SYRUP.FI, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. If you've ever wondered what financial freedom looks like in the age of AI, meet Newton, a smart, secure way to empower AI agents to work for you without giving them custody of your assets. For a world beyond interfaces, built for autonomous finance within your own tailor-made set of guardrails. Follow Magic Newton on X and get ready to try Newton soon. This episode is brought to you by SKALE, the next evolution in Layer 1 blockchains with a gas-free, invisible UX, instant finality, and robust security. SKALE allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Visit SKALE.space today and follow their journey on X at SKALE Network. Overwhelmed trying to manage your crypto and DeFi investments? Meet iYIELD, a free financial planning tool for crypto natives and yield farmers. iYIELD's dashboard compares returns from your DeFi positions side by side, providing clarity to help you make better decisions. iYIELD supports a growing list of over 16,000 tokens and 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that iYIELD is 100% free, anonymous, and there are no ads. Check out iYIELD.com today to take control of your financial future. Hey folks, I wanted to tell you a bit about our sponsor, PYTH Oracles, your go-to source for smarter data to power smarter contracts. PYTH delivers real-time market data for crypto, equities, FX, and commodities to over 80 blockchains. With 120 plus major market participants like Jane Street, Binance, and CBOE, PYTH ensures secure, low-latency feeds trusted by 430 DeFi apps. You can learn more about PYTH by going to pyth.network, and thanks to the PYTH community for supporting us here at the Edge Podcast and Edge Newsletter.
Kedian, I want to just pick your brain quick on just the state of the yield-bearing stablecoin space, because I think if you've just been paying attention to it the last maybe 3 to 6 months, there's just been a rush of new competitors that have kind of come into the arena. So, competition is heating up. Just curious, just your general thoughts on all this competition you're seeing in this yield-bearing space.
Yeah, so I think my first thought is like, as an industry, I think we do need to start being more accurate in our descriptions of various products that are coming to market. I think we're very used to calling everything that is dollar denominated a yield-bearing stablecoin. And, maybe that is just, what we stick with because that's what we're used to. I think if we really look at like the mechanisms for each of these different, quote unquote, yield-bearing stablecoins, they have very different models. And personally, I would roughly, and there's no like clear line, but I would generally divide them into like more savings type of products, and that includes Level as well as like essentially like treasury-backed products. And then the other category is like, I would consider them more like investment products. And these potentially have more sophisticated strategies kind of under the hood. and they have very different risk profiles. And, just once again, just because they're dollar denominated or the principal is supposed to be pegged to dollar doesn't like necessarily mean that all of them are suitable as like savings products. So that's like the first thought. Second thing is, to your point, there's being like so many of these new yield products that have come to market. And I think my first thought is just like, I just generally believe that more options and more competition is good for the market. It's good for users. It encourages innovation, it encourages experimentation. And so, sort of like welcome that. And then the second is, I also don't necessarily think of it as like competition per se. Because if we think about traditional finance and the fixed income market, there's literally like thousands or even like tens of thousands of different products. And it's like, yes, I guess in some ways they are competing. Some of them do compete for like similar capital, and that's where the competition comes in. But ultimately, there is like a very wide spectrum of like investors that have different risk return profiles. And so someone that like an investor that wants to buy treasuries is very different to an investor that wants to invest into like a market neutral hedge fund, for example. And so in some ways, those products don't actually compete with each other. And then like even like if we're looking at non like stable assets, if we look at Bitcoin versus ETH versus altcoins, like, at the end of the day, they're just different ways for people to, people use them ultimately as an investment. And like, I think in some ways there is like this rotation of capital, and that's where the competition comes in. But ultimately it's just like, you're serving different types of users with different products. And then the last point is probably that competition exists when there is like a limited amount of demand. And so then you're like fighting for the same capital. But I think as an industry, the goal really should be like, how do we actually increase the demand? How do we bring more capital on chain to like be able to invest or use these different types of products? And when demand increases, then the competition actually like for the same amount of like products on the market, the competition actually decreases. And then each product is kind of serving like a very specific like niche of users or investors. So yeah, that's kind of like my general view of just like, all of the different products on the market and how we think about competition. I guess the one thing to add is in terms of where we see Level is like, another one of the reasons we created Level is that we actually think there's almost a gap in the market for more low risk products. I think since Athena launch, we've seen a lot of these like, yield bearing stable coins that have started to generate yield from more complex and sophisticated strategies, or people are bringing like illiquid RWAs on chain. And all of these I would consider kind of like further along the risk spectrum. And this was sort of like because people were like chasing higher yields. But then I think what we realized is that there's actually a way to generate very competitive yields, which we've been doing while keeping the risk profile very low. And that's, if anything, we actually think it's a space that's actually relatively less competitive compared to like the high yield, but also high risk kind of side of things.
This all resonates with me. I am looking for yield that is better than T-bill yield, but I'm not necessarily looking for double-digit yield that, is eye-popping. I'm looking for, 7, 8, 9%. I think that is extremely competitive yield to earn on chain. The problem, of course, with a lot of different yield-bearing token designs is, they're newer. It might be untested code. There might be some sort of risk there that I'm just personally not willing to take. So I completely resonate with this sense of there's a gap that it seems that Level is looking to address. I especially like the fact that I was looking at the historical APYs. This is on the Level website. So if you go to app.level.money, and if you go to transparency, there's a tab there, I believe, that shows the historical APYs. And so anyways, long story short is the historical APYs over the past, let's say like 3 months or so, for the majority of that 3 months, the staked lvlUSD has been outperforming, these others that we noted earlier, like Athena's SUSD. And it's impressive. Again, the point here is to sustain a higher yield, but to not have to take some outsized risk. I can't imagine, if you're managing hundreds of millions of dollars, let's say in a liquid fund someday, the last thing you want to do is be winding up risky positions. So just absolutely speaks to a gap in the market there. One thing I'm curious about is there like an archetype of a user that you see as the biggest opportunity to increase that demand? You noted that like if there's a limited amount of demand, that's the real problem in terms of growing Level or any sort of like stablecoin protocol. We need to grow the demand. We need to attract net new capital on chain. Do you have any other thoughts to expand on that in terms of how do we actually grow that demand, or who do we tap into to onboard that much more money on chain?
Yeah, I think there's a few potential categories here. So the first, which I think as an industry we've been talking a lot about, a lot of this is driven by Athena and other protocols that have done a great job here, is like how do we bring institutional capital on board? And the institutional investments is literally like, multi-trillion dollar industry. There's so much capital out there. And so I think there's like and each risk return profile itself is like massive. And if anything, I think the lower risk return is like much that the demand from like the lower risk return investors is actually much higher than like the riskier stuff. And that's kind of why, treasuries are like one of the biggest assets that exists. And so I think being able to tap into that, into that demand is going to be very important. And we're actually starting to see, for example, Morpho has also been driving a lot of this. They're starting to bring a lot of institutional like players on board that are interested in the risk return profile of on-chain lending. So I think that's probably like going to drive a lot in terms of like demand from a TVL perspective. I think the other side, which is what I was sort of describing earlier in terms of, why we got into crypto in the first place, it's like, how can we increase the number of users that demand this product, even if like the total TVL is currently smaller from that group? And this is where, we can potentially offer these types of products as commissionless banking and like commissionless savings products. But then a lot of this is about like, how do we actually onboard more people, like, especially in these emerging markets, to crypto in the first place. So I think those are kind of like the very interesting kind of pockets of capital that we're interested in.
So let's talk about the two token design here between lvlUSD, lvlUSD versus staked lvlUSD. What can you tell us about this design, and how does yield accrue to staked lvlUSD?
Yeah, so the design, just to explain it, is I think there's two ways to explain it. The first is this is like probably the most common form of dual token yield-bearing stablecoin models that are on the market. So it's very similar to, I think it was actually probably Maker that pioneered it with like DAI and SDAI. And then now they're like obviously rebranded to Sky. And then Athena uses a very similar model. And I think most kind of yield-bearing stablecoins have this, where there is the unstaked version. In our case, it's lvlUSD, which is pegged to the dollar. And then you have the staked version, that's the one that accrues yield. And then using like a more like traditional finance analogy, kind of what I was alluding to earlier, you can think of like the unstaked version of the stablecoin as like a checking account, and then the staked version as like a savings account. And, with your bank, it's the savings account that pays yield, not your checking account. And so how it works is so lvlUSD is backed by, like we said, USDC and USDT and lending protocols currently. And then the yield is only passed on to the staked lvlUSD users. And so this is through like a very standard 4626 vault mechanism. And so what that means is that the total amount of yield that's earned by the protocol is concentrated among like a relatively smaller, or it's concentrated among like a subset of lvlUSD users that choose to stake. And that's kind of why the stake version has higher yield. And this is also true of like, Athena and other similar protocols.
MANTLE is charting a course towards a future of enabling crypto access for everyone, with major endeavors to build MANTLE Banking and MANTLE Index 4. MANTLE Banking means a new crypto neobank that helps users spend, save, and invest across their fiat and crypto finances, all in one account. MANTLE Index 4 is a tokenized fund in partnership with one of the leading tokenization platforms in the market. You can think of MI4 as the S&P 500 of crypto. To learn more, check out group.mantle.xyz, and thanks to the MANTLE community for supporting us here at the Edge Podcast and Edge Newsletter.
Kedian, I think I had a guy, I posted this Twitter Spaces yesterday on Twitter X. I guess I should start calling it X. I don't know when I'll ever start thinking to do that. But this user was kind of bringing up the question like, okay, well, who is actually holding the lvlUSD? And like, I think it's a good question. Like, what is encouraging people to hold that version? Because clearly you've got some disparity. You've got a group of people staking it and a group of people holding the lvlUSD form. So yeah, what are the, I think it's very clear the incentives for the staked version. Of course, you're getting great yield. What is the incentives to hold this non-staked version?
Yeah, so in this stage that we're in, which is still relatively early, and also true of other yield-bearing stable coins, is we're sort of in this growth phase of trying to get to a certain scale first, and so often described as like the bootstrapping phase. And so the incentives for people to not stake lvlUSD ultimately is driven by like our XP incentive program, and so yeah, so that's kind of like the at the end of the day, like people who are not staking lvlUSD are using lvlUSD to earn as much XP as they can. And there's various ways to do this, including providing liquidity, including splitting like the XP, splitting like the yield. If you think about XP as like an alternative yield, like splitting that on Pendle, using the assets as collateral to borrow on like lending protocols like Morpho, etc. So yeah, it's like there are incentives, and except that instead of like real yield as the incentives, it's the XP.
Yeah, I'm looking at the farm tab under XP farm on app.level.money, and you can see that there's all the familiar sorts of DeFi protocols here. Most notably, there's lots of opportunities on Pendle. I was actually reviewing these this morning, just thinking about some of the PTs, because I think that there's somewhere around like 9 to 10% APY that can be locked in. So that's fixed for anyone that just wants to earn a simple fixed PT yield with lvlUSD or staked lvlUSD. But anyways, you can see that the rewards are stacked highest for those who are going to provide liquidity in Curve. So is Curve the one venue for providing liquidity for level and staked lvlUSD? Is there any other AMM that is hosting liquidity for those two coins?
No, we've just chosen to concentrate all of the secondary liquidity on Curve. And so there is a lvlUSD USDC pool, and there's also a lvlUSD slvlUSD pool. So those are the two places that you can provide liquidity, as well as the two places that you can, it's the one place, Curve is the one, venue that you can provide liquidity, but there's two pool options. And then it's also where you can buy and sell, or like swap for lvlUSD and slvlUSD on the same. There is like also liquidity on Pendle, but that's obviously different. It's like the liquidity to buy and sell PTs.
Yeah, I want to get into that Pendle yield eventually here, but I kind of want to just start at this kind of first foundational level. We've been kind of talking about where the yield comes from in this arrangement with Aave, and then I believe Morpho came fairly recently. Correct me if I'm wrong there, but I want to kind of get into how you discern which Morpho vaults to go with. I think for starters, I think I've seen that you're with like Stakehouse Vault, and what I know about Stakehouse, I mean, that immediately resonates as like probably one of the more trusted, methodical, thoughtful vault operators and curators in the Morpho ecosystem. So I think I can understand why you made that choice. But yeah, would just in general kind of touch on your thought process here, and like where you would go eventually, like how far out on the risk curve you're willing to go in these like Morpho vaults, I guess, if that makes sense.
Yeah, good question. And first of all, yes, we actually only just started allocating to Morpho, I think, 2 weeks ago. So it is like a recent, it's like a recent product upgrade that we're very excited about. I think the general principle here, kind of going back to, I think what I've almost being a bit repetitive about, is like we sort of think of ourselves as like an on-chain banking or on-chain savings product. And so, I mean, there's no clear definition, but like the principle is like, we're going to stay with low risk stuff. And it's kind of like, is this something that is, if it's something that's significantly more risky than what, like a bank or like what a savings product should offer, then we wouldn't like do that. And so, we obviously started with Aave because they're like the largest, lending protocol. They have, and ultimately like Aave's advantage is their liquidity. And then with Morpho, there's a lot of different vaults on Morpho, but we are sticking to the ones that are, once again, lower risk. And so there's a couple of prime vaults that are curated by Stakehouse, and then I think the other major one is Gauntlet. And so prime vaults are like low risk because of the collateral that's accepted in the vaults. And so typically this is just like versions of Bitcoin and ETH, like the safest, most liquid assets on the market. And then the other side of risk is related to liquidity. So if you look at the collateral, Aave's collateral is actually more risky than some of these Morpho prime vaults that I mentioned, because they do accept basically like a larger variety of collateral. But then Aave is like one advantage where like they're less risky is because they're very liquid. If there's an extreme scenario where we need to withdraw all of our reserves from the lending protocols, Aave can support that currently, even at like, nearly 200 million. Whereas like with Morpho vaults, they're still in the process of, I guess, getting to that stage. And so if there is a Morpho vault that is extremely liquid, but may accept like slightly riskier collateral, that's also something that we would consider. But yeah, that's like the general idea. It's like, is the source of yield like very low risk? And that's kind of exclusively what we're focused on. So I think, I think the other, I guess this is a little bit of alpha, like in terms of other yield sources that we're looking at, we are looking at, for example, like Spark, which is the sub-DAO of Sky. And yeah, that's kind of like the category of yield that we're looking at, which there's honestly not very many of them on chain.
That makes sense. Fluid was also top of mind for me, but Fluid is newer. And so I absolutely would rank Spark without any sort of comprehensive risk framework in front of me. Yeah, Spark was very top of mind. So I'd love to see them included in that. And, again, speaking firsthand to looking at lvlUSD, thinking about the different yield-bearing assets out there, I was just running through like my own checklist and thinking through like, all right, what's here? What are the risks to consider? I think like the most notable risk for me personally is just how new Level still is. Like, it's something that can be overcome by continuing to, thrive each and every day. Every day that you're live without an exploit, without any sort of issues with the underlying assets, is a win. But the fact that the majority of the yield is sourced from Aave for me is like risk-free yield at this point for stable coins. So the fact that you're able to enhance what I can get on Aave, which would always be my home base, always is my like on-chain benchmark for yield that I can earn. I can again speak firsthand to the benefits I see there as a farmer, thinking, all right, like this is low risk. I'm not doing anything with leverage. I'm not, doing any sort of like looping position. This is, let's call this, this is a more like vanilla approach. And I think to the point you made earlier, like that's what so many of us want. Like we want to sleep well at night. We want to have reliable, predictable yield, and we want yield that sustains. Like the longer that lvlUSD continues to prove that it can outperform whatever other, benchmarks are out there that we've called out, the better. It's just going to attract that much more capital And thankfully, because of the depth of liquidity on an Aave, I see, so much room here for this to grow. But Kedian, are there any other risks that are top of mind for you? Like anything else that you might call out for us as users?
Yeah, I mean, we're very happy to be very transparent about, all of the risks. And I think, if anything, every product on the market should, because that's how users, have the most information to make a decision. I mean, I think the framework here is like with any product, you can actually just like break it down into the various components, and then you can analyze each of those risks and then essentially sum up those risks. And so happy to go through that exercise with Level. And so, it's actually relatively simple for us. Like users come to us with USDC and USDT. And so because we're ultimately backed by these two assets, that's the first risk, which I think at this point, most people in the space are very comfortable with. The fact that you were holding USDC and USDT in the first place means that you trust those assets. And so we can I think the risks associated with those are pretty negligible at this point. But obviously, we also did see Circle depeg back in 2023. So it's not like there is zero risk there. And then the second is, you are coming to us Level as the protocol to deposit your USDC and USDT. And so there's various, essentially where this layer of smart contract risk that is that does exist. And our contracts are, audited by multiple of the top security audit firms out there. But, to your point, we are still relatively new. And, as we stay in the market for longer, there's more Lindy effect, and then there's more trust built up in our smart contracts. I also want to note that our smart contracts are built in a way where, there's only very few certain actions that can be taken. So the reserves can only be allocated previously to Aave. We actually had to upgrade our contracts to be able to allocate to Morpho. And so now we can allocate to Morpho. And then, if we were to add Spark, we're actually working on another smart contract update to do that. And so it's there is, so basically I think that's what I'm trying to say is that, with some protocols, it's actually just a multi-sig that the team controls. And it's in theory, I think, those funds can actually be moved anywhere. Whereas we actually have predetermined paths that are smart contract based for where the funds can go. But regardless, that is smart contract risk. And, there is a chance that could get hacked. And then finally, the last component of what we do is where we generate the yield from, which is from Aave and Morpho currently. And so then, there's a chance that Aave gets hacked. There's a chance that Morpho gets hacked, or there's, something else that happens there. But, to your point, at least Aave, I think is considered kind of the crypto risk-free rate. They've been around for a long time. They're very battle tested. And then Morpho, I think, is kind of getting to that stage as well. And so, just to quickly summarize, the three key risks involved with using Level are the risks with USDC and USDT, or Circle and Tether. There's Level's smart contract risk. And then there is the yield source risk, which is currently Aave and Morpho. And then I think one thing to also note, which is very nice about what we do, is because we are fully built on chain, there's actually no need, you can just look on chain, you can look on Etherscan to see exactly where the reserves are. There's sort of no need for third-party attestation providers, which is actually another layer of trust that needs to be involved with a lot of other stablecoins. And so, a key benefit of what we're doing is this just full on-chain transparency.
Sliced, diced, baked in a pie, mashed into sauce, or straight from the tree, apples are pretty epic. But you know what's more epic? Paying for them with crypto. Borrow, earn, and pay with MOONWELL.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to GEARBOX.FI. Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking, with new products such as UNIFI-based ROLLUP and UNIFI Pre-Confirmations AVS. UNIFI is not just another L2. UNIFI is a based ROLLUP, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted puffer points, which means if you bridge assets, you earn boosted puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi.
Kedian, I want to get into more about yield. So I started noticing you guys on Pendle pretty early. I think you've done a great job of kind of executing on Pendle. Maybe you can highlight your strategy there, what kind of yield offerings people can get on Pendle, and maybe the differences between, your staked versus non-staked version, and just maybe wrap in how XP kind of works on Pendle as well as the kind of real yield.
On Pendle, we essentially have pools for our unstaked level USD as well as pools for staked level USD. First thing to note is that there is we currently have two different expiries for both assets, and so the first one is actually expiring very soon. It's in I think it's expiring on Monday, around 3 days, and then the second is September expiries, and so we have that for both level USD and S level USD. And so with S level USD, the premise of Pendle is ultimately like yield trading. And so with S level USD, there's obviously yield that's associated with it. And so you have your S level USD PTs and YTs, and that essentially splits the principal from the yield. With the unstaked level USD, by itself there is no yield, but we do give 40x points for the PTs, and basically give 40x points to level USD, and then that's essentially like the points or like the XP are treated as like the yield, and that's kind of what's getting split between the PTs and the YTs. So essentially, you would use Pendle to speculate on XP for unstaked level USD, and then you would use S level USD on Pendle to speculate on the real yield.
So Kedian, any other yields throughout DeFi that we should know about here with Level?
Yeah, I think the other main one is we have a Morpho vault that is curated by M11. And so that's actually a way where you can deposit your level USD and earn real yield on it that's not coming from S level USD itself. And so basically you can deposit level USD into the vault as a lender, and you can earn yield from that as people borrow the level USD on the other side. So I think that's kind of like the other main category of like yield that users can earn.
Guys, we're probably close to wrapping up. I just wanted to double check. Is there anything else top of mind for you, Kedian? Anything else that you think our audience should know about in terms of Level?
Yeah, I think one question that a lot of people ask is like we said before, right now, unstaked level USD is essentially subsidized by like our points program. And so I think people ask kind of what happens when like these XP incentives end. And then they I think probably correctly assume that, all else equal, then, people are going to start staking, and then the S level USD yield starts to converge with lending protocol yield. And so the question is like, why use level USD at that point instead of using like the lending protocols directly? And there is like this, we believe like this is very clear value proposition, even in that scenario. And specifically it's related to capital efficiency. So if you use the lending protocol directly, what happens is, on Aave, you're holding either AUSDC or AUSDT. And as far as I know, there's not really much you can do with these A tokens. You're basically, even though like these assets are like, permissionless, and there are things that has potential for things to be done with it, there isn't really any use case. And the difference with like, if you were to use level USD or S level USD, is we've integrated S level USD into like Pendle, into Morpho and other lending protocols. And basically you can reuse like this asset to unlock more capital efficiency. So for example, you can take level USD and S level USD and use it as collateral on Morpho to borrow more USDC that you can either use to like, mint more level USD or for other use cases. That's not something you can do with like Aave USDC, Aave USDT, or like the Morpho vault tokens. And that's kind of like this very, that's kind of like the very clear like sort of value proposition, even in a world when like our slvlUSD yield might converge closer to the lending protocol yields. And then the other thing to add is like, we are still in this growth phase. And so, being realistic, there aren't as many use cases for lvlUSD currently, other than earning XP. But like as a team, we are very focused on like, how can we create long-term value for unstaked lvlUSD in the long term? And that includes like, how do we create more use cases? And how can we actually have lvlUSD used as like a stable coin kind of in the real world? And that's kind of ultimately what, Tether does a great job at, right? Like because USDT is used essentially as like a form of real money, they're able to basically, Tether doesn't really share that much of the yield, but it's kind of like that's how they are able to essentially accumulate more yield as like the company. And if they wanted to, they can use that to share yield. And so that is something that we are very aware of. And I think, we do have like, we are working on like a specific strategy around creating use cases for unstaked lvlUSD beyond just XP.
Yeah, I think despite all that we talked about in terms of the risk profile being so appealing with lvlUSD, I'm seeing with these Morpho vaults that you are making possible all sorts of different looping positions. So, for folks that like to loop, this is another great opportunity, I think, to check out a stablecoin pair where, you're ultimately able to borrow close to, I think it's like 91.5%, at least on a few different Morpho vaults. The one I'm looking at is one of the larger ones. The liquidation threshold on this is 91.5%. But anyways, regardless, I'm thinking that unlocks somewhere around like 10 to 12x looping capability, depending on like how much leverage you want. I won't go into that anymore because personally, I'm not a big fan of using high leverage in looping positions. But the thing about DeFi that I love is that, we give people the permissionless ability to do whatever they want with their money. So love to see the options here available. And none of that is possible if you don't have a reliable yield-bearing asset like staked lvlUSD. So really cool to see that made possible. Guys, I think this is a good place for us to start to wrap up. So I want to remind our audience that they can learn more about Level by going to level.money. They should follow lvlUSD, that's lvlUSD on X. Follow Kedian's son on X. And then Kedian, just thank you so much for joining us. It was great to be able to like dig in with some of the questions we had doing some like research on Level and trying to figure out ourselves like, okay, when does it make sense to deploy capital into this? Do I just go with like the staked lvlUSD? Do I farm with Level with, vanilla lvlUSD and earn XP? It's been really, really helpful for me personally. I'd love though to close out with any bit of final alpha you might share with our listeners.
Yeah, I think I'm happy to like highlight a few different opportunities that are available right now. So I think the first is this week, you might have seen that we announced our Level ecosystem vault that is curated by Stakehouse. And so what this vault allows is, it allows two things. If you're a lender, it's like you can basically lend USDC into the vault and earn like a very competitive yield, and the vault is secured by like collateral that's relatively low risk, and all of the collateral is related to Level assets. So like, lvlUSD, stake lvlUSD, Level PTs, etc. And then, as a borrower, you can use these assets to basically borrow USDC and loop if that's kind of like the strategy that you're looking for. So that's the first vault. It's a new vault that I wanted to highlight. The second is what I briefly mentioned before, which is the M11 curated vault on Morpho that allows you to earn organic yield on lvlUSD outside of like the lvlUSD ecosystem. And then the thing to highlight here is that this is a way to earn real yield as well as XP at the same time. Because if you just stake lvlUSD, we don't give XP for that. And then finally, just like a reminder that, like I mentioned, our Pendle pools are actually, the May expiry Pendle pools are expiring very soon. And so it's a good time to start rolling that over into the September expiry Pendle pools. I think those are probably like the three things that I would highlight.
really appreciate that. And congrats on growing, to this stage, like being at, 185 million. It's no small feat. But I absolutely share in that view that there's just so much more room for us to grow. I get really frustrated when I see protocols clearly competing with one another because there's like a musical chairs in DeFi. There's only so much liquidity, and like really the winners are going to be focusing on product design that is going to attract that net new capital. And I think that for someone who is managing hundreds of millions, hundreds of billions, maybe even trillions someday, they're going to be looking for this sort of risk profile that you've described. How can I beat T-bill yield, but still maintain like a near risk-free sort of profile on chain? So I think the vision makes total sense, and I'm excited for this. I think this is another proof point of how DeFi is maturing.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.